Next category, what you owe. What are the major reports for what you owe? You would think that would be on, let's close this one out, the balance sheet for the liability, accounts payable. Now note, you'd only have accounts payable if, as bills are due, you're not paying them off with an electronic transfer or possibly even a credit card, but rather putting them in the books as a bill, increasing the accounts payable to be paid and sorted and then paid at a later date. If that's the case, then we're going to be using this area. Many small businesses don't use this area because they basically pay the bills as they become due. Larger companies are going to use this area more because they have larger bills and more of them typically, which means that paying them a little later has a significant impact on cash flow as well as value of money, inflation impacts, and savings. So accounts payable aging summary, this is the standard report similar to the accounts receivable aging, basically breaking out the amounts that are due into post how overdue they are. Now, most of this information, again, will be done internally. So we're going to go into the expenses or vendor tab and into our vendors or into our bills, sorting the bills. So even if we have accounts payable, you're probably going to go here more than the reports, but we might provide the reports for external reporting purposes or for internal reporting purposes as we discuss it. Account payable aging details, similar. Bills and applied payments. So that's going to give us more detail because the bills increase accounts payable. The payments, applied payments, are the payments we made, which are the decreases. Bill payment list, we've got the 1099s. Now the 1099s are specific to the United States for income taxes. And if we have an employee, we're required to do withholdings. If we don't have an employee, the IRS still wants us to say, hey, I would like you to rat out who you gave the money to because I need to go after them to get the income. Now, who do we have to rat out? Well, the IRS isn't concerned with big businesses typically. So they're not really concerned with corporations. Why? Because they already have their hooks on the corporations. Edison is not going to try to evade taxes. What are they going to do? They're going to try to collude with the government, right? They're not trying to get out of taxes. They're trying to level up the amount of laws and regulations in order to decrease competition through collusion with the government, right? So the government's not worried about them not paying their taxes so much. They're worried about the little guy, the contractors that might fly under the radar. So if they're not incorporated and you pay them more than a certain pretty low dollar amount, that's who the IRS wants the 1099 for typically. So they make sure they can get that little guy, All right, and then we got the 1099 contractor balance summary. You've got the unpaid bills. So these are obviously the things that should construct the accounts payable because you have entered the bills but not yet paid them. You've got the vendor balance summary. This is the classic subledger report, which is going to break out who we owe money to by vendor, which again, you would normally track internally in the customer center. Vendor balance details similar.